Three of the largest banks in the world were caught quietly buying Bitcoin in Q2. JP Morgan with $5 trillion of assets under management, Goldman Sachs with $4 trillion of assets under management, and UBS, the largest bank in Switzerland, with $7 trillion of assets under management, all buying Bitcoin as reported by their SEC 13F filings. And despite Jamie Dimon trashing the Clarity Act all year long, JP Morgan alone bought $400 million worth of Bitcoin exposure, equivalent to roughly 6,250 Bitcoin. So ask yourself, why are all of these banks buying Bitcoin now? Is the bear market over? Do they see the future? Is the institutions the ones that are going to lead us out into the holy promised land of above 100K again? Well, I do want to play this Matt Hogan clip from Bitwise because he might have revealed the reason in this clip yesterday on Bloomberg.
And when this hack happened, we barely saw a budge in the price of Bitcoin. Talk to us whether we're seeing a real separation between Bitcoin and the broader ecosystem of digital assets when a hack like this isn't even moving the price of the stock. I mean, maybe is this at the point where hacks don't necessarily undermine investors' confidence in Bitcoin?
Well, I think there's an element of that, but I actually think there's a bigger story going on. We've seen over the last few months that negative news hasn't harmed Bitcoin at all. When Michael Saylor started selling Bitcoin, Bitcoin held flat. When Stretch traded down to 75, Bitcoin held flat. When the Clarity Act odds fell from the mid 40s into the teens, Bitcoin was rallying. One sign that you're at the bottom of a bear market is when an asset stops responding to bad news. In a bear market, it tends to over-respond to bad news and ignore good news. We're in the reverse right now. We're ignoring bad news. We're maybe over-indexing to good news. I think it's a sign that we may be at the bottom of this crypto winter and that we may have a strong end of the year.
So then if you think we're at the bottom and we have a strong end to the year, what would be the next catalyst in your view that could actually move this asset higher?
Yeah, I think actually it's a quiet catalyst underneath the surface, which are these large wealth management platforms. I really think that is the next marginal buyer of Bitcoin coming into the market. And that's not a 1 minute catalyst. That's something that takes place over time.
Guys, relax and chill. Big Bitcoin is in control. Gotta love it. I've been kind of making the same case that Matt Hogan has, that one of the things that we see often in a bear market or towards the end of a bear market is that no amount of bad news really moves the price too much. Yeah, maybe we're down a little bit today, but in reality, we're basically going sideways. We've been flat for a while. And there has been a lot of bad news. Obviously, the cold card hack, Clarity Act failed. We've got Saylor selling, and Bitcoin's just like not doing anything. It's just shrugging it off. It really doesn't care right now. And so even though we're not seeing an explosive price action right now, it is making me more confident that we are at the very end of the bear market. Now, how long can this last? Obviously, no one has a crystal ball and we don't really know. But there is one thing that Matt Hogan said at the end, which is, I think, the trend we've all been watching. I know 2024, BlackRock got the Bitcoin ETF. That was the start of the institutional phase. And in the last 2 years, we've basically seen only a trickle of capital find its way into Bitcoin from these institutions. But as we're seeing, and we're going closer towards the end of this year, and we'll probably see next year as the price starts ripping again, is that I think that capital finding its way into Bitcoin is going to compound, and I think the floodgates will eventually open. Now, what Matt Hogan said at the end, I think, is the best thing to keep in mind right now. I know we're all impatient. We've had a long, brutal bear market. We've had a lot of catastrophic events happen. Oh, I forgot to mention, there was a fork that happened and people left the network. But these institutions move very slow. And again, we get impatient. I know we always talk about time preference, lower our time preference. Guys, this is a long term. This is a marathon, not a sprint. But in the short term, we're always just thinking like, all right, guys, can you hurry up? Can you start buying already? Like, can you buy in bulk? But they take their time. And I think that's what Matt Hogan was saying at the end, is that they're taking their sweet time to position themselves to get into Bitcoin, but we are starting to see that happening. And some of these buys, or rather these ETF exposures that we're seeing from these institutions, again, some of the largest institutions in the world, largest banks in the world, it's showing that exact story play out. So let's get into it. First one is JP Morgan. Jamie Dimon's been very vocal all year long. You know, at first his story, his saga is even more interesting. You know, he was one of the biggest advocates against Bitcoin. We had the classic Davos clip of him saying, like, Bitcoin's, you know, it's for criminals and money launderers. It's going to go away. I'm tired of talking about this. Then shortly after, all he could seemingly do was talk about Bitcoin. And also, let's not forget, he is, or rather, JP Morgan is one of the authorized participants to the BlackRock IBIT ETF. So even though publicly the sound bites coming out of Jamie Dimon, head of JP Morgan, are very negative in terms of Bitcoin, what are they doing on the back end? Again, don't listen to what they say, watch what they do. They are participating in the Bitcoin ecosystem. They're the authorized participant of one of the biggest ETF in the world. And now they are continuing to add more Bitcoin to their portfolio. So JP Morgan buys $400 million of iShares Bitcoin ETF in Q2, bringing the total position to $650 million. The largest U.S. bank nearly doubled its Bitcoin ETF exposure in a single quarter. Again, doubled its exposure in a single quarter, signaling deepening institutional conviction in the asset class. They added $400 million worth of the IBIT ETF to its portfolio during the second quarter of 2026, so in the last 3 months, and the purchase brought the bank's total IBIT position to 17.8 million shares, valued at roughly $650 million. Now, this is where it leans into what Matt Hogan was saying. To appreciate this trajectory here, you need to rewind a few months. At the end of 2025, JP Morgan held approximately 3 million IBIT shares. Again, 3 million at the end of 2025, and now they have 17.8 million shares of IBIT. By the close of Q1 2026, that number had ballooned to roughly 8.3 million shares, a 175% increase. The Q1 buying spree happened during a period where, of course, Bitcoin was down. In other words, JP Morgan was buying the dip at institutional scale while retail investors were hitting the panic button. It's something we've been covering on this show for a while. If you look at the on-chain metrics, I forget what the names are that we use, you know, the shrimps and the sharks and the dolphins, basically retail Bitcoiners, just the average Bitcoiner, they've been getting scared out of their position. They've been getting shaken out. They've been selling. And at the same time, the institutions have been scooping up a bunch of Bitcoin. And the whales are coming back online as well. So underlying on the on-chain metrics, it looks like, I hate using the term smart money, but the deep pockets are re-entering the market right now. You know, I'm thinking of our reigning cash maxi on Rumble, JJ. You know, it looks like the institutions were just trading Bitcoin to perfection. They probably sold around the top. Now they waited a couple of months. Now they're re-entering the market. Good trade here. And I actually saw an interesting chart that I'm not going to bring up on the show, but of I forget what his name is. I think it's Kim Yon. no. It's like Kuyan Lee from CryptoQuant. And he basically said this cycle, the OG Bitcoin traders have been trading the best they ever have. So I guess the writing was on the wall. And maybe the institutions were following that lead. And this is why they're re-entering now at the very bottom of the market. But going further, we also have UBS. Again, the biggest bank in Switzerland. And we all know the Swiss. You know, they're a neutral country. They've kind of been known for their central banking, for their banking prowess around the world, being a neutral bank. And now one of the biggest banks in Switzerland is also increasing their Bitcoin. And this is telling the same story. So UBS triples its Bitcoin ETF position to 90 million as institutional appetite keeps growing. Look, some of our friends are stuck on a fork of Bitcoin right now, and some of other friends are capitulating their Bitcoin, and many of us maybe had to use some Bitcoin to survive, the biggest institutions in the world are trying to get into Bitcoin right now. It's almost like things are working out exactly as designed. It's almost like the institutional phase is starting to get kicked into overdrive. But anyways, what do I know? Going further, the Swiss banking giant now holds 2.5 million shares of BlackRock's IBIT, up from a modest starting point just 2 years ago. And this is where what Matt Hogan was saying is telling the same story. UBS Group AG has tripled its stake in the IBIT Bitcoin ETF, bringing its total position to roughly 90 million across 2.5 million shares. For a bank that started its Bitcoin ETF journey with 3,600 shares worth less than $150,000 in early 2024, that is a remarkable change of posture. And this is where that story continues. The trajectory tells the story more clearly than any single number. UBS entered IBIT in Q1 of 2024, basically right when it was launched, with a position valued somewhere between 125,000 to 146,000. By December 31st of 2025, it had grown that stake to 548,614 shares worth approximately 27.2 million. The bank then reported 364,000 shares valued at $14 million as of May 2026, before the latest filing revealed the jump to 2.5 million shares at $90 million. Now, it's not just JP Morgan or UBS. It is starting to become a trend. These are just the biggest names. They're the ones with the most assets under management. They're the name brands here. But going further, across the institutional landscape, 1,560 separate organizations collectively held IBIT shares worth more than $27 billion in Q1 2026. Some hedge funds pulled back on Bitcoin ETF exposure during Q1 2026 as the price was dropping, while banks as a group were increasing their positions. Guys, I know we're here and we want Bitcoin to be peer-to-peer money. We want to transact in Bitcoin. We want a lot of people holding Bitcoin individually in self-custody, controlling their own money. But as we're seeing, we are in the I would say maybe the end of the beginning and the beginning of the end for the institutional phase. We are starting to, I believe, see the ramp up. And I think these numbers are going to increase even more. I think we're going to see even bigger splashes into the IBIT or the Bitcoin ETF products. Now, I know, especially in the face of the news that we've been kind of dealing with since this weekend in terms of the BIP 110 and the fork and how, the plebs want to be in control because of the nodes and big Bitcoin is in control and it's too centralized. I always go back to, and I'm always doing the same thing, back to Hal Finney's post literally days after the Bitcoin network was created, that in the future, we will probably see the same amount of Bitcoin transactions that we did 15, 16, 17 years ago, which is not that many people are transacting. And the base layer will essentially be a settlement layer for all the biggest institutions in the world. Now, I know this makes people feel uncomfortable because the narrative of the institutions are taking over Bitcoin is very prominent right now. But if we believe that Bitcoin will become the world reserve currency, if we believe that the entire financial world will eventually be on Bitcoin, then was this not how the process was going to happen anyways? I'm always surprised by people that, and I think I fell into that camp when BlackRock first got into Bitcoin. I was like, oh no, now, like my early young Occupy Wall Street mentality came in. It's like, oh no, I don't want the corporations and institutions to buy Bitcoin. Like this is not for them. This is for the people. But if we are building the next world reserve currency, the next financial system, then doesn't it make sense that all the institutions in the world will eventually adopt Bitcoin? Now, obviously, I'm not the biggest fan of the ETFs. It is paper Bitcoin. You are trading your Bitcoin so that they can custody, and they are literally giving you paper shares of the Bitcoin that they hold. Now, This does add other problems here. How much paper Bitcoin is there in the system? Or rather, how much paper Bitcoin is actually being traded? And further, as everyone's been kind of following along, is do these institutions, do these ETF products actually hold the Bitcoin? I think from all the on-chain metrics and all of the kind of research that I have been able to find, it does seem like these ETFs are actually holding all of that Bitcoin. Now, obviously, there's like a +1 delay, so we don't know exactly how much they hold on any particular day. We can only see, okay, they held this a day after, and then we're kind of always playing this game. Well, we don't know exactly how much they hold, but we're seeing this happen in real time. And I think in the context of what we're seeing right now, in the context of this bear market, there's 60, I forget, well, I don't know what, like 63.5 per Bitcoin price right now. You're looking at it and you're like, yeah, it does feel like we are at the tail end of this bear market. And now I know everyone's saying October is when the bear market's going to officially be over. Everyone's waiting for one more down leg on the Bitcoin price. But I think we're I've been saying it. I think we're in a new era here. There is a new market buying Bitcoin. There is a new investor, a new participant in Bitcoin right now. And that is something that I think most of the charts and most of the backtracking and tea leaf reading aren't really accounting for. Obviously, if we're looking at the price, it's very easy. It makes it very simple to just be like, oh, look, bear market or 4-year cycle is playing out perfectly. Nothing's changed. The psychology of Bitcoin is still the same. But I think there is a very, how do I say, maybe a silent explosion building up. You know, there's tension and pressure building up, and we just haven't seen that explosion play out yet. And this really leads into how I'm just not a fan of diminishing returns. I'm really been liking the ISM PMI kind of correlation right here, where we're all looking at, you know, we're all trying to make sense of what's been happening in Bitcoin. And if there is that correlation between the business cycle and the Bitcoin price, and of course, the M2 money supply and just the general amount of liquidity and paper in the system or dollars in the system, we're all wondering, okay, well, M2 has been going absolutely vertical, but the business cycle, we haven't really been in an expansive business cycle since 2021. And I've been seeing a lot of people essentially say that we haven't had a real bull market since 2021. And if that is the case, what we've been seeing on the Bitcoin price is that we're kind of seeing like bear market rallies. Obviously, the price has gone up since 2021. It's also come back down. But has it really been a true bull market? I think we can all feel in the sentiment that it actually doesn't really feel like a bull market. And if that business cycle chart does have any correlation to what is going on in the Bitcoin price, then I think that is a good, and I'm going to use narrative here, that is a good, maybe a mental crutch to use, where it's like, oh, well, that's why it hasn't felt like a bull market since 2021. It's like we really haven't expanded at all. And despite the fact that the economy has been contracting, and despite the fact that we might have been in a recession for years, Bitcoin will still do its thing and continue to go up. But just imagine when we don't have the macro factors working against us. Maybe we finally get back to some explosive price action. Maybe 2017 can happen one more time. Can we run it back? Can we run it back and have some glory days once again? Only time will tell. But I'm pretty convinced that, and again, you guys know I was wrong about last cycle. Okay, I was convinced we were going to 150K. It didn't happen, but I don't really fall into the camp of people saying, oh, we're only going to 150K this time. To me, that makes no sense. What, a double from here? Basically, maybe a 2.5x from here. Like, I don't think that's how this is going to play out, considering that we are seeing literally the ones with all the capital finally starting to embrace Bitcoin, even if it is through an ETF, even if it is through paper Bitcoin. I think the demand for Bitcoin is going to explode. And with that, of course, the price of Bitcoin is going to explode. And with that, of course, the adoption of Bitcoin is going to explode. And the general consciousness around what Bitcoin is going to finally seep into the brains of the normies out there. They're going to finally, I don't think that, and I've said this before, I don't think that everyone in the world has to be a hardcore Bitcoiner like us. I don't think they all need to know every intricate detail about the blockchain. All they really need to do is catch that FOMO bug of, hey, I need to use this to protect myself, and I just need to do enough study so that I can actually protect this. And if we do get that phase of new adopters, of new users of Bitcoin, and it literally just becomes, again, I use the 100th monkey theory all the time. I don't even know if it's a real idea, but it's a good idea to kind of wrap our heads around this. Once enough people finally figure it out that Bitcoin is something to hold and they no longer laugh at it, it instantly just becomes something everyone has in their portfolio. I don't think we're there yet, but you're starting to see that that foundation is being built. Now, we have one last news, which maybe this is your bank. Actually, this one's kind of funny because I've told this story before. My friend, actually, one of my best friends growing up, his little brother is an asset manager or finance. He's one of the financial shills for this particular bank, and it's Goldman Sachs. And for years, he would always kind of troll me. He's younger. He's a little cocky. He's like, "Are you having fun with your Bitcoin?" And he's like, "I'm at Goldman. I'm a Goldman. I'm a Goldman shill here." Well, not only have they expanded their Bitcoin ETF exposure, but now it looks like they want to buy their own Bitcoin ETF. So Goldman Sachs to gain Bitcoin income ETFs and up to $2.25 billion NEOS acquisition. There is a shitcoin ETF along with it. We know Wall Street's going to shitcoin, all right? So Goldman Sachs has agreed to acquire NEOS investment. Honestly, I'd never even heard of NEOS, but whatever. Except for, wasn't there a shitcoin called Neo? I think there was. Anyways, Boomer showing his age. To acquire NEOS investment for up to $2.25 billion, a deal that would give the traditional finance giant 3 crypto income ETFs. NEOS offers the Bitcoin High Income ETF, a boosted Bitcoin High Income ETF, and then a mother of all shitcoin High Income ETF. And then this deal is expected to close in the first quarter of 2027. So again, that timeline of 2027 seems to be the year where we're really going to enter the institutional phase of Bitcoin. So Goldman agreed to acquire NEOS again for $2.25 trillion in cash and equity, subject to certain performance and service commitments. The deal would bring the NEOS Bitcoin High Income, boosted high Bitcoin High Income. The transaction is expected to close 2027. NEOS founded in 2022 and manages over $30 billion across 19 options-based income ETFs. Quote, as investor demand for active ETFs grows, NEO's disciplined investment approach is highly complementary to our capabilities across buffer, manage outcome, and income strategy, said David Solomon, chairman and CEO for Goldman Sachs. These ETFs are a little interesting, though. Notably, the 3 crypto funds do not invest directly in Bitcoin. Instead, they gain exposure through ETF products linked to the assets and use option strategy to generate monthly income. So sounds like a lot of paper Bitcoin is coming to the network. Can we withstand all the paper Bitcoin? Who knows? But again, the trend is the same. We're seeing the same trend. Let me think about this. Hold on, before I say it. I think every big bank in the U.S., and as we're seeing around the world now, is in some way or fashion being involved in Bitcoin. And so when you hear the big banks, fight the Clarity Act because of my stablecoin yield, or you talk to your friends and they're like, well, the banks don't want it. The banks don't want Bitcoin. Like, why should I want it? That's literally not even correlated to reality. I think every huge bank has some form of Bitcoin exposure or a Bitcoin product. Now, I know this doesn't make everyone feel good because, you know, I'm a cypherpunk hardcore Bitcoiner. But is this not just showing us that we are very, very deep in the institutional phase? They want this thing. And as I've always kind of been, you know, I'm a low IQ Bitcoin investor. And I'm also not a far left collectivist, so I don't hate rich people. I've always looked at it like I will learn from rich people, and what are the rich people doing? Well, it sounds like they're all trying to get a little bit of Bitcoin. So as someone that's been in Bitcoin, and as you guys have been in Bitcoin for a long time, I wouldn't take this as like we're losing the war or losing the fight. This is almost like a vindication of everything we said what was going to happen. Do we not believe that Bitcoin is going to be the next world reserve currency? Do we not believe that the entire financial world will eventually either port directly over to Bitcoin, or we're in some intermediary phase where they are kind of still dollar maxis, but they are using Bitcoin because they can't lose out on this digital asset race? It's all playing out. It's all happening. And now, is it happening exactly as we thought it would? Not really, but it's still happening. We are seeing institutions, banks, hedge funds, all look at our pretty and precious Bitcoin and wanting it, wanting some of the pie. And you know me, I'm a number go up hopium maxi. I'm like, dude, it's happening, guys. Big Bitcoin is in control. We are just a tail on the dog. And I've been kind of trolling a lot in terms of big Bitcoin. Do they want it, or do they want to collect fees? Who cares? Of course they want fees. But they're shilling it to their customer base, and they're the ones with all the customers. Whether they want it or not is I don't even think the argument. They are making moves into Bitcoin. And what does that mean? That they're going to shill Bitcoin to all of their customers. Hey, maybe they think this is, what was the mortgage-backed securities 2.0? They're like, look, I'm not here saying that Wall Street is benevolent. I'm not saying that Wall Street is doing this for the benefit of Bitcoiners or even the benefit of their customers. They could think Bitcoin's a, giant pile of dog shit. But that is the Trojan horse of this. They're pushing it on their customers. They're like, hey, look, we got Bitcoin ETFs. I know you've been asking for Bitcoin ETFs. Yes, maybe we don't personally hold it on the bank balance sheet, and we just get fees on top of it. But all of their customers are holding it. And if you watch the on-chain data for the ETFs, and again, forgive me, guys, but the boomers that are buying the Bitcoin ETF, the majority of them are holding on to this. The majority of them are the diamond-handed holders right now. I forget what the percentage of Bitcoin ETF outflows that we've seen. Basically, since the price has gone down, are the boomers selling their Bitcoin? And I think it's something like 75% of money that got into these ETFs have been holding these ETFs and further been adding to their positions. So now we have a whole new cohort, a whole new investor, a whole new market that for 15, 16, 17 years ignored Bitcoin. Now they've got some exposure in Bitcoin. Yes, the bear market, 4-year cycle, whatever. But they're going through their paces. They're going through their cost of tuition, and they want this thing. Now, obviously, they want it for maybe a different reason than us because it's in a paper Bitcoin ETF product. They probably just want number go up. They're not necessarily here for the freedom revolutionary aspects of Bitcoin of, keeping these institutions and governments honest and you being able to transact peer-to-peer. But they're invested psychologically and financially. So I don't really care what their intentions are at Wall Street. They're greedy. Bitcoin has a very unique element about it where it hijacks your greed. Where you come in for number go up, the next thing you know, you're like shilling for Bitcoin and trying to orange pill everyone. It's kind of a beautiful incentive model. Boomers helping us for once. Let's see. One last comment. There's nothing wrong with the ETF if they're legitimate in the buying and selling of the Bitcoin. They're supposed to be buying and selling and storing. Well, down under. So from everything I've seen, that is what's happening. That they are actually buying the Bitcoin, and legitimately whatever they're selling is the outflows. I think that does get into the rehypothecation aspect of this. Now, obviously, there could be some rehypothecation happening that we are unaware of. I mean, we are already seeing a lot of leverage ETF products, which is what Goldman Sachs is basically buying. And does that necessarily mean that all the Bitcoin they hold, is what these ETFs are? Not necessarily all of them, but for the majority of the just pure spot Bitcoin ETFs or ETPs or whatever you want to call it, it does seem as if they are buying all of the Bitcoin they claim to be buying. So, yeah, exactly. Craw gets it. Arkham Intelligence allows you to track ETF wallets on chain if you are really concerned about paper Bitcoin. Exactly. All right, anyways, guys. I got a special treat for you today. I'm going to cover the first part is not a special treat. It's actually probably more of another PSA. Dude, self-custody land is just getting beat up right now, but it'll make us better. So Trezor had a data leak. If you bought in Trezor this year since May to August, watch out for phishing. You probably got your information leaked, but I'll break down all the details for you guys so you guys can be aware of what's going on and what you can do. And then I am going to get the one, the only Dr. Jeff Ross in here to wrap up today's show. So we're going to get a little macro. I think maybe ignored macro a little bit. I've been talking about the geopolitical, macro implications, but finally, he's back on Twitter, so we're gonna pick Dr. Jeff Ross's brain here. So when we get into the culture, if there's some questions that we don't cover, I will be watching the chat a little bit, guys. Okay, so on that note, first break. I will be right back. Here's the part that nobody says out loud. Buying Bitcoin on an exchange and leaving it there isn't buying Bitcoin. It's buying an IOU. And the last decade has been a masterclass in what happens when those exchanges don't deliver on their promises.
Bitcoin Well is a self-custody Bitcoin platform. That means that when you buy Bitcoin, it goes straight to your self-custody Bitcoin wallet. You actually own it from the very first transaction. They're available both in the United States and Canada. Pricing is transparent, straightforward, and no nonsense. And if you're buying a larger amount of Bitcoin, Bitcoin Well Infinite gives you concierge-level support through a dedicated executive Bitcoin advisor, premium help for when it actually matters.
You can also stack a little extra through the referral and wishing well rewards. A nice bonus on top of the owning your own Bitcoin thing. So go to bitcoinwell.com/simply and sign up for the Bitcoin Well portal today and buy Bitcoin you actually own. Paper burns, paper floods, paper fades. If your seed phrase is written on paper, it's not really backed up. It's waiting to disappear. Stampseed's DIY kit lets you hammer your seed words directly into commercial grade titanium. Fireproof, crush-proof, waterproof, and permanent. Once your words are in the metal, they aren't going anywhere. Use code SIMPLY at stampseed.com for 15% off anything in the store. That's stampseed.com, code SIMPLY. All right, guys, before we move on, of course, I got to talk about our sponsor, Keet. Guys, we all know there's basically no privacy on the internet. Every DM you've sent, every iMessage, I don't know what they say it on Android. I'm not an Android user, but all of our messages, unless you're like on Graphene or something, are most likely not private. Your finances, your children's photos, your family photos. That one sneaky link pic you sent, your home address, everything is most likely being exposed. Now, you may trust the people that you're in the group and they're not going to dox you, but do we really trust the companies operating the apps? I know Apple's been saying, hey, everything's end-to-end encryption, but like, do we really trust it? I don't know. Keet gives you another option. It's a free messaging and video calling app built peer-to-peer with end-to-end encryption built in and no centralized company database holding the family conversation or your, not safe for work DMs, not messages. Keet also doesn't track metadata. Nobody needs to provide a phone number or an email to join. You can create family groups, share files and photos, and make audio and video calls all without turning your entire life into another corporate data profile. Now, actually, before I move on, our boy Yellow was just telling us yesterday in the chat that you can use Keet also like a cloud, like a data storage. Upload it, and you can get it on everything else. I haven't actually really done that. Keet's also what's the Google Drive? Keet's also Google Drive, bros. Anyways, go visit keet.io/simplybitcoin. That's Keet, KEET.io/simplybitcoin. Download it free. Invite your friends. Invite someone you trust first and foremost and start a conversation that belongs to you guys. All right, guys. On that note, let's look at the price. Current Bitcoin price is 63,110. Wow, 63,110. Love it. Love it. That is literally a 50% discount on Bitcoin from all-time high. The market cap is 1.27 trillion. And the block height to real Bitcoin is 962,310. I repeat, 962,310. I saw someone in the chat. Sorry, I'm trolling someone in the chat saying that Bitcoin block height is. I don't even know where the BIP 110 block height is. I bet Opti roll. Dude, I don't roll dice, bro. I probably should have rolled dice, but you know me, man. I'm lazy. Maybe now I have to roll some dice. Okay, whatever. I didn't roll dice. What saved me is I created a cold card seed in 2019 on an MK2. I would have totally got wrecked if it was a 2020, 2021 MK3. I don't remember what I did. It was like 7 years ago, but I'm like, I can almost guarantee you I didn't roll the dice. Anyways, on that same theme, bros, self-custody's been getting cooked. Absolutely cooked. It's like I saw someone post, I think it was Greg Zaj. He posted the Randy Marsh. He's like self-custody advocates right now, and where he's all beat up and he's like, I didn't hear the bell ring, bro. Another one of these stories. So here we go. No, RL. I do not roll those. I used to. I do not anymore. Trezor announced this morning they have some difficult news to share. Unfortunately, one of their shipping providers has experienced a data breach that exposed sensitive order data. So it wasn't Trezor. One of their shipping providers leaked all the data. This affects new customers in the US, UK, Sweden, Colombia, Brazil, Italy, and Portugal who received an order within the 90 days prior to August 8th, 2026. So essentially, if you bought in a Trezor in the last 90 days, your data was exposed. And the data that was exposed is your full names, your shipping address, your phone numbers, and your email addresses. Absolutely brutal. The incident affects 11,742 customers with full exposure and 1,947 customers with partial exposure. So just your name, city, and email. The breach is limited due to Trezor's strict 90-day data storage policy. We were also able to negotiate the same terms with fulfillment partners who follow the same policy. All affected customers have been contacted separately by email. Our systems and devices remain secure, but affected customers could experience an increase in phishing attempts. Never, I repeat, never enter your wallet back up on a website or share it with anyone, and only check for updates on the official Trezor channels. We are deeply sorry to the community and those affected. We are investigating the situation and we'll post updates. So here is the blog post just to kind of get an idea of how this happened. Summary of the event. So Shipmonk, one of Trezor's shipping providers, has experienced a data breach that exposed sensitive customer order data, again, including full names, shipping addresses, phone numbers, and email addresses. Trezor devices are still secure, but affected customers could experience an increase in phishing attempts. So on Monday, August 10th, one of our shipping providers, Shipmonk, informed us of an unauthorized access to their systems containing customer data. This occurred due to a data breach, and investigation is ongoing. So to be clear, Trezor was not compromised. Your Trezor device is secure, but the affected customers might be targeted by more sophisticated phishing attempts and, of course, also $5 wrench attacks. So what should you be doing if you bought a Trezor recently, maybe in response to the card hacked? Well, first of all, I would just safely assume that any email that is looking like Trezor, I would just ignore it. Just if you see it, don't let them get you in a panic. If you see something, I don't know, breaking, update, security now, something of that nature, I would just completely ignore it unless you're seeing it from Trezor themselves. Second, you might be getting phone calls saying something similar, like, oh, we're from Trezor, we need to get on the phone, your product is not safe, or text messages, and you need to put in your seed phrase now to protect yourself. Just completely ignore it. You know, I get a lot of, and sorry, not to make too light of this situation, I get a lot of crap here at Simply because I have like, I don't even know, 500 plus messages and 10,000 emails, and my Slack is like mostly unread messages. I was just built to ignore the phishing emails and contacts. I just ignore everyone. You know, it's hard to get through to me, but that is the advice. Ignore everything coming from Trezor right now. All emails, and actually not just right now, like for the foreseeable future. Now, the leaking of your home address is probably, I got my Trezor off Temu. Yo, chill. The leaking of your home address is probably the most scary aspect of this. Obviously, like, you can't just necessarily up and leave. That's probably not the case for most people. So that one's the one that really is the most concerning for the majority of people. Is like, this is why most people in Bitcoin really lean into the OPSEC of things. I don't want everyone knowing. Like, I'm cooked, all right? I'm sacrificing for you guys. I'm sacrificing for this job. You guys out there, take it from someone that's doxed themselves. Do not dox yourself, all right? It's not worth it. Just hide behind the Anon account, talk about Bitcoin on the internet with no one knowing who you are. Don't show your face. It's way easier that way, all right? But, you know, you watch the show, everyone... Well, no, hopefully, well, as of now, not everyone, but eventually, if we do get big enough, everyone will know my face, and then I'm cooked. And then I really got to update my physical security models here. But that one's the most brutal one. Like your phone number, your name, you know, you've probably already KYC'd yourself. For most of the time, most people KYC themselves to get onto an exchange. And obviously, we don't like seeing data breaches. And maybe this is like an inherent systemic failure of most of the Bitcoin hardware wallet companies. Though Trezor did update this, and I guess they're going to try to figure out ways to ship your hardware wallets more privately. And that's probably like, moving forward, the best advice is usually ship a hardware wallet to like a PO box. I like how BitKey does it. Yes, they're a sponsor of the show, but that's besides the point. I like how they actually did their shipping, where they'll ship it to, you know, one of their, I forget what they call it, like cypherpunk or privacy locations. Like they'll ship it to a post office near you, or like a Walgreens or CVS near you, where you can go pick it up. So there's no actual address linked to your name. Yeah, I don't know kind of where you are, etc. But I think most companies now in the hardware space are probably going to move towards something of that nature, where you can order a hardware wallet online, and it doesn't necessarily get shipped to your house. Now, maybe if you live in an apartment and you're only going to live there short term, maybe the trade-offs is probably worth it. Or just like send it here. Who cares? We should care, but you know, we all like convenience every once in a while. I look, full disclosure, I've sent some hardware wallets to my old apartments. I was like, I live in an apartment. Like, I'm not going to be here that long. And sucks to be the guy after me. It sucks to be the guy that moves into the apartment after me. But okay, look, I'm not trying to make light of the situation because this is horrible. Obviously, this is one of the problems we've seen in hardware wallets for a long time. Data breaches. Obviously, the cold card one was the worst because it literally messed up at the fundamental job it had and you lost your Bitcoin. And if you are in Europe in particular, maybe France in particular, this is truly not a good scenario because we've been seeing a lot of $5 wrench attacks happening in France currently. And we've seen a lot of people kidnapped for their Bitcoin. And, you know, maybe if you're in Latin America, it's probably not the best advice to ship it to your house. But yeah, dude, just in general, the self-custody space right now, it's pretty brutal, dude. You know, we had the cold card hack. The following week, we had the token wars really amp up where AI was looking at all the security code of critical Bitcoin software and hardware, and a lot of bugs were found. We had the BTC Pay server AI kind of vulnerability happen. We just saw bolts, you know, had to essentially stop for a couple of weeks. Now, I don't know if you guys saw, but the bolts team, they all stepped down and someone's taking it over now. And then we have another data breach. I was talking to Luke this morning and he's so fried right now. Everything's a conspiracy to Luke. He's like, it's kind of coincidental, isn't it? I'm like, yeah, the timing could be suspicious, but I don't think everything's a conspiracy now. I think this is just one of those things that happen. It's been a rough month or so for, well, I guess it's been about 3 weeks. Rough 3 weeks for Bitcoin self-custody. And this doesn't help when we're seeing BlackRock offer lower in-kind redemptions on ETF and, you know, a lot of coins in Coinbase Prime. Self-custody right now has been beaten up, but there is ways to mitigate this. And that still, to me, doesn't mean that you shouldn't be self-custodying your Bitcoin. Now, maybe the conversation has evolved a little bit where maybe you do want to diversify your holdings a little bit. Maybe everything you own, you don't want it in a single sig hardware wallet at your house. That's why we've been talking about multi-sig and collaborative custody, and or, you know, there is a conversation to be made about maybe you do want to do the ETF. Now, for most people, maybe that's not what you want to do, but there are options out there. But in the last week, guys, everyone is fried right now. Yeah. What's the latest on LN and BTC Pay? Still draining servers? No, I think I haven't checked their Twitter today, but I think I saw Rockstar post about the BTC Pay server, and I think they are launching an update or something. I think they kind of caught it pretty quickly, but I think they just launched a new update. I think it was today, and the LN, I think Bolts is kind of back, but the team is basically all stepping down. And though I did see this morning, and I didn't really have enough time to research it, but it looked like ARK launched a new Lightning product so that what happened with Bolts doesn't happen again. So Lightning isn't cooked. BTC Pay server, I think it's back. Oh, here we go. 908. All right. The current block height is not 961, 635. The current block height is 962,311. You're literally what? Almost 600 blocks behind, bro. Cooked. Absolutely cooked. Got a $200 hardware wallet to store $5 in Bitcoin. Okay. All right, guys. Our guest is here. So I'm gonna go to the break. We're going to come back with a Dr. Jeff Ross himself.
I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. If you ever thought, what happens to my Bitcoin if something happens to me? Or what happens if I lose my phone? You're not alone. For a lot of people, the biggest barrier to self-custody isn't buying Bitcoin. It's the fear of making a mistake. And that's why I like Bitkey and I recommend it to my friends and family. Bitkey is a Bitcoin wallet built for real life, not just for day one, but for everything that happens in between. Lost devices, upgrades, accidents, and long-term ownership. There's no seed phrase to write down and worry about losing, and no single point of failure that can lock you out of your Bitcoin forever. What really stands out about Bitkey is the peace of mind. Recovery is built in, inheritance is built in. It's a complete self-custody system built by the team behind Square and Cash App, designed to make holding your own Bitcoin simpler and safer. Take self-custody of your Bitcoin today using Bitkey. Go to bitkey.world and use promo code SIMPLY for 10% off your new Bitkey. That's bitkey.world, promo code SIMPLY. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy across 3 continents, HIVE runs dual engines, Bitcoin mining and AI compute. Their AI platform is ranked #1 in the world for network performance, and it's doing something bigger than compute. It's accelerating human discovery, the science, the breakthroughs, pushing humanity further and faster. Listed on the NASDAQ with the ticker HIVE. Catch the latest buzz at HIVE Digital Tech on X or HIVEDigitalTech.com.
Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, cell towers can fail. Hurricanes, cyber attacks, blackouts, most people go dark. Satellite phones don't rely on local infrastructure. With Iridium, 77 satellites in orbit, you can stay connected across the U.S., even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123 also has Starlink, battery backups, Faraday bags for your hardware wallets, and everything you need to build your own off-grid Bitcoin citadel. Go to sat123.com/simply and use promo code SIMPLY for 15% off anything in the store.
Okay, we're back. Dr. Jeff Ross, how are you doing today?
Opti, what's up, brother? It's no longer Dr. Jeff. I'm just
Oh,
Jeff.
you're just formerly Dr. Jeff. I forget. Okay.
Yeah.
Well, I think first off, man, how was your hiatus? It must have felt good. It must have been nice to not be on Twitter.
It was awesome. Although, man, I tell you what, I feel like I came back like during some kind of civil war.
Oh, you did. Yeah, you literally did.
I posted this last night. I've been back for about 2 weeks, and it feels like I've aged like 2 years. It just like it's just chaos out there right now. It's really wild.
Yeah, no. I think it's like the peak bear market sentiment, and you've been gone for a little bit, but dude, it's literally just been like a being in the cafeteria, and it's just like a food fight constantly every single day. It's been pretty brutal. Anyways, enough of that. Dr. Jeff, I think let's start with that. Let's start with where do you think we are with the current Bitcoin price? Do you think we're, I don't know if you've been seeing, but everyone's been saying, 4-year cycle bottoms in October. Like, what is your sentiment right now? What are you feeling? What are you watching? Like, how are you conceptualizing this for yourself, and how can we relate this to the audience?
Sure. So, well, first of all, I'm one of those people who have been saying the 4-year cycle is dead for
let's go.
a couple of years. So I said that, last year, and I said that, unlikely to be October, and then it was October of 2025 where it peaked, even though it was a disappointing peak. I said that the cycle before as well. I said Bitcoin is a macro asset now. It should trade only on kind of macro wins, things like, global monetary supply, liquidity, what the economic sectors are doing, manufacturing, things like that. It should trade like an asset like stocks or bonds or currencies. And then here we are, and it looks like it's going to do almost exactly the same thing again, right? So it's pretty funny and pretty humbling for sure. So where are we? I will say, I think we're in an awesome spot. Like, this is just a great area to be accumulating, and it has been. This is the point where, Bitcoin has civil wars where people, say they're here for the technology, not the price action, where the true builders are actually building things, where the OGs are just quietly stacking sats while everybody's panicking, and wondering if they should, move on to tech stocks and those kind of things. So, in fact, just before I came on, I was reminding myself of where we are, and looking at the 200-week moving average, which I think is just a fantastic way to get based in every cycle. And what we're doing right now, the 200-week moving average is usually the point where Bitcoin either bottoms or it's in the region of the bottom. And if you can buy at or near the 200-week moving average, generally 1, 2, and 3 years later, you're doing really well. In fact, I had something that I posted a while back that showed that if you can catch basically the last time it touches the 200-week moving average or buy around that price, in years past, and I'm not saying we're going to have the same kind of cycle like years past, but in years past, 1 year later, the lowest price it was up about 110% or something from that 200-week moving average. And so I'm not saying that's going to happen this time, but I would say with a pretty good amount of confidence that, once we get past this little bear market phase, which I think is nearing an end, if we haven't already hit a bottom, I think about 10, 12, 14, 16 months from now, the price is going to be doing much better than it is right now. So you can't go wrong buying a lot of Bitcoin at or near the 200-week moving average. And that's basically exactly where we are. I think today, at least on my trading view chart, where the 200-week moving average price is $63,997. And as we record this, the Bitcoin price is $63,086. So great time to be stacking sats.
Yeah, 100%. Before we get into the macro stuff, because there has been a lot of macro, I don't know, chaos, a lot of things to watch in the macro kind of space. You did mention kind of like the business cycle. So do you hold a lot of weight in the ISM PMI chart and that correlation with Bitcoin?
So yes, I am one of those people. And in fact, I talk about it like this 3-burner theory. And in fact, that has a lot to do with, at least the way I understand things, why the last bull market peak was so disappointing for so many Bitcoiners. And I'll try to run through it quickly. So I think of 3 things. So I think of the price of Bitcoin as like sitting on a stovetop in a huge cauldron. It's like a stew, right? And there's 3 burners underneath it. The first burner is liquidity. And basically everybody and their grandmother knows about Bitcoin and liquidity and their relationship, how they're really strongly correlated. I'll talk about caveats to that in a little bit. But let's move on. Burner number 2 is actually the business cycle, and more specifically, the U.S. manufacturing business cycle, or the U.S. manufacturing PMI, I think is the best thing to correlate with it. And you can see throughout the Bitcoin's short history a direct correlation with the movement of the U.S. manufacturing PMI up or down, and the price of Bitcoin, the movement up or down. And then the third thing is leverage, and leverage kind of goes with the other 2. Those are when people are feeling bullish, when the animal spirits are just running hot, when everybody's talking about stupid proof of stake crypto nonsense garbage, and they're all going, levered long 50 to 1 or 100 to 1. Like, those are kind of end stage behaviors that lead to that exponential price move higher in Bitcoin. So let's back up. Why was 2025 disappointing? Why did we not have that hockey stick higher, that exponential move higher? We did have liquidity, and I want to caveat this real quick. So it used to be that global liquidity led Bitcoin, because throughout the world, throughout the globe, when there was excess liquidity sloshing around the system, lots of people would put that into Bitcoin, not just in the West, not just in the US, but across the world. And China especially was a major player. As we all know, China has really clamped down on Bitcoin ownership and have very, I would say, strongly encouraged their citizens to think about gold ownership. And what's interesting is and Michael Howell has done a lot of work on this. I'm sure you're familiar with him. He's kind of the liquidity guy. Has shown there you can now see somewhere along the way it branched, and now Chinese liquidity or excess liquidity now basically goes into gold, and it has about, I want to say, a 6 to 9 week advanced Bitcoin gold lags the movement of Chinese liquidity by somewhere between like 6 and 9 weeks, and has nothing to do with Bitcoin really anymore. And US net liquidity continues to lead Bitcoin price. So that's nuance number one. Back in 2025, we were still having decent liquidity. It was still high and rising, but interestingly, we didn't have a manufacturing renaissance. In fact, if you go back and look at the charts, especially of US manufacturing PMI, it fell, it crashed in the bear market of 2022, like everything else crashed, and it never recovered. It stayed below 50. It stayed in this contractionary, recessionary phase all the way. It had a couple times where it popped up above 50 into expansion phase, but it, for the most part, stayed below, kind of in the mid to upper 40s, all the way through 2023, 2024, 2025. And that has never happened since the World War II, since World War II, and since we've been tracking this data. Very unusual. And so for me, that's kind of the main thing. So that was burner number 2, actually never turned on underneath the cauldron of the Bitcoin stew price. Okay, so we had liquidity. We didn't, but we were lacking Chinese participants for the most part. We didn't have US manufacturing taking off like it normally does, like it normally follows these kind of 4 to 5 year cycles. And then number 3, because of that, we didn't have these animal spirits. So we didn't have people levering up, going long, going 100 to 1 leverage to try to jack the price up and to go all in on stupid proof of stake cryptos. That's why I think we had a disappointing bull market, the end to the bull market in 2025. It's also why I think we're having not that severe of a bear market. So even though the price has only come down about 50%, it's because we didn't have that huge hockey stick higher in price during the bull market. So the good news of that, or the silver lining to that cloud, is it means that there's basically less of that excess waste, and that excess leverage to basically get flushed out of the system during this bear market. So even though the price is disappointing while it kind of flops around in the 60s, it's kind of crab market right down here at the bottom of the lake. It bodes well for what's coming in the future. So I'm waiting for some signs that US net liquidity is going to start increasing again. And we're seeing little things make it pop a little bit, right? When we see what Besant did for Japan, those little kind of doses, I call them, they're like Operation Twist. They're not technically yield curve control, but it kind of is. It's sort of like indirect yield curve control, these things that are happening from a macro standpoint. And now we're seeing the manufacturing sector take off. Although, and then here's my final caveat, because this really throws a kind of a interesting twist to everything. There is a limited amount of capital or dollars, and there is a limited amount of energy or electricity in the world, and especially here in the US. Because of the direction of the Trump administration, they have pushed almost all of that into rebuilding the US industrial sector, right? It's going into data centers, AI. We have to win the AI race, is what you hear all the time. So they're funneling dollars and they're funneling electricity and energy preferences into that system, as well as into the military industrial complex, right? And into our just general infrastructure that's getting rebuilt as globalization dissipates and we kind of bring everything back to the United States to try to become a manufacturing powerhouse again. That takes a lot of money and it takes a lot of energy, and all of that that is being directed into those sectors right now, which leaves very little for Bitcoin right now. So that has helped to propel the stock market higher in all things AI related and all things industrial and energy related, but it's left some things kind of on the sideline. And that's what I think is happening with Bitcoin right now. So at some point, something is going to change where there'll be a huge flood of liquidity. So what I think is going to happen, should we stop here, by the way?
No. I think I mean, I have a bunch of questions, but I think just keep going. I think the chat's following along.
Okay. And I try not to watch the chat because it distracts me too much when I'm talking. I'm already too distractible. I'm like the squirrel. So there's a lot of talk right now about this whole AI investment being this kind of circular investment, and we're starting to see weird financial behaviors similar to 2007, 2008, and similar to 1999, 2000, where everyone is talking about these unbelievable revenues that are coming and these orders, like everybody has backlogs of orders that will be paid at some point. And so that's very, for equity investors, that's super encouraging. Like you want to see that. You want to see revenues just increasing and accelerating, going off the charts, and they are, and backlogs just going off the charts, and they are. But at some point, if somebody along this circle can't pay, so like I'm talking about NVIDIA and all of the semiconductor companies, and then all of the hyperscalers that are involved, that they've already burned through all of their free cash flow. And then they've issued, that's step number one. And then step number two is they've issued tons of equity to raise more cash. They've already done all that. Then step three is they've gone to the bond markets and they're taking out hundreds of billions of dollars in loans to the public markets. Step four is now they're getting the sort of the dark markets, the KKRs, the Blackstones, these other institutions that are backstopping their loans now at this point. And this is the kind of stuff you see. And now we're starting to see these loans get put into tranches, similar to what we saw back during 2007, 2008 with this whole mortgage, these mortgage-backed securities, right? And these credit default swaps, these CDOs, these kind of things. This stuff is starting to happen now in the AI sector for the data AI infrastructure build out. The first tranche just got evaluated and was given a AAA rating by, I think, Moody's, which is just exactly the same as what happened back in 2006, 2007, 2008. And we all know how that ended. So at some point, this whole circular financing rush for capital that's happening right now in the AI data center build out, chaos, at some point it's going to run out. So we've seen these unbelievable equity gains so far. Has it already peaked? I don't know. What will happen when the capital runs out and we have the last buyer? It's not going to be good, but things are going to come down. And I think that this whole sector and the backing of the Trump administration has made it too big to fail. So at some point, stuff is going to start to crumble and it's going to start to look really ugly. And I think it's going to happen pretty quickly this time, like faster than it did back in 2007, 2008. And I think the government is going to be forced to step in and backstop it. And by backstopping, that means, so we all know the phrase, right? These companies, they privatize the gains and they socialize the losses. So when things are good for the semiconductors and all the hyperscalers and everybody involved in here, you're like all the CoreWeaves, right? And Oracles, and just pick your company. They make massive gains, huge equity gains. Their market caps are just, going in the multi-trillions now. When this collapses, it's going to be considered a national disaster and an emergency, and it's going to be a threat to the overall monetary and financial system. So the government will be forced to step in and flood it with cash to save it. And what that means, it's going to debase all Americans and all users of the US dollar to help save it. So they're going to socialize the losses. So they're basically going to be backstopped by the US government, just the way the banks and all the housing industry was backstopped by the government back in 2008, 2009, and all of the regular people paid, right? People lost houses, they got destroyed, they went bankrupt, they didn't get anything out of it, but the bankers got saved. The huge institutions got saved. Everybody who had connections to Washington, D.C. was saved, but the regular people gets hosed. That's how you socialize the losses. And I think we're setting up exactly the same way this time. And I don't know when it's going to happen, when the bubble will pop, but it will pop at some point. And that's going to be a bad day.
Yeah, no, I've been following along pretty closely as like exactly what you said. And part of me is like, I can't tell if I'm just being kind of bearish on AI. And then the whole like cold card thing happened. I was like, okay, maybe I underestimated AI, but like there's still a bubble in AI. And just going through the sequence of events, just to like add another little cherry on top, like Michael Burry, what didn't he come out yesterday? It was like, hey, the AI hype bubble, this is gonna burst. And you're just like, wow, okay, we are reliving 07, 08 all over again. Though that leads to, and of course, you basically just said it. We don't know when it's going to pop, but I have been seeing a lot of people essentially say, you know, things have changed now and they can run it a lot hotter than we can even expect. So what's your thoughts on that idea? Like, we know it will come down, but is this time, I'm not going to say it's different, but are the, I don't know, the macro kind of governmental levers right now, like how much harder can they run it, I guess is the question. Because I did see you tweet about the, you know, the death spiral is accelerating, but it's almost like all the old numbers and old metrics don't even matter anymore, just because they're like, we're going to run this until the wheels fall off.
And I think that's what happens. And people hate this answer, but it's true in finance, that it's going to work until it doesn't work. Until the day it doesn't work, there's going to be a Minsky moment, right? That's like something like what snowflake is the one that causes the avalanche, right? And that's something will happen at some point where the market will finally be like, okay, that's it. And the big players will suddenly rush out, and then it'll start this avalanche down. So when is the question everybody wants to know, and it's a fool's errand to think about these kind of things or to make predictions, right? I get predictions wrong all the time. I'm sure people in the audience are flaying me for getting predictions wrong in the past, and so I do, right?
Me too.
I was wrong, everybody. I was wrong. It did not hit 475K in 2025. So don't listen to anything I say. So especially about the future, because I'm just guessing.
Well, wait, Jeff, it's more of the framework. Like, I think that not necessarily the prediction of when, it's just like, how should people be viewing this? Because, you know, when you talk about this stuff, everyone does the, you know, just going in the bond market. It's like, oh, if the U.S., you know, government bond yields go above 5%, like it's all going to explode. And, you know, there's a bunch of metrics that people throw around. But when you're looking at it, you're like, wait, I think they can just like, those numbers don't matter anymore is basically what the vibe I'm getting.
Yeah, I will say that in 2022, basically, we turned into an emerging market from a financial standpoint here. And when I say we, I mean the United States. And what do I mean by that? When now, unlike in the past, so from 1980 to about 2021, anytime the stock market would crash, people would sell their stocks and rush into bonds. So bond yields would go lower because bond prices would go higher because people were buying bonds, right? So they would flee to safety into the US dollar, into US long-term bonds, and out of risk assets. And then when it was safe, they would sell some of their bonds and go back into stocks. That's why this whole 60-40 stock bond portfolio was just brilliant for about 40 years or so in the US. Those days are over. The bond market bottomed, and several of us were talking about that and saw that coming back in like 2020, 2021, that, you know, when we reached negative interest rates in some countries, in Japan especially, but multiple countries. That's unsustainable. That's crazy. That was clearly like the peak of the bond huge bull market that they had for about 40 years. We live in a different world now. We live in a world now, and especially here in the US, because of the amount of debt we have, that when things hit the fan, people sell stocks, and then they also sell US treasuries. So you see stocks go down, and instead of going to the safe haven of bonds, bonds actually get sold off as well, and yields actually go higher. And people also sell the dollar now. When you see that triple combination of stocks down, treasuries down, meaning or yields up, and dollar down, you just absolutely live in like a third world country at that point. And that's what we're going to right now. And that's, to be honest, and it's unfortunate, but most of the Western world has been following our lead, or is leading us, like Japan is ahead of us with how much debt they have, although they have a lot of assets too. So that's why I think that it's not as panicked, the situation isn't as terrible over there. But it's not good. And so when these kind of things happen, the old safe haven asset of the U.S. Treasury, that no longer holds. And so what you have to do and what you have to think about is what serves as a safe haven asset, if not the U.S. Treasury and if not the dollar. And I think most people on your channel would know, right, how I feel about that too. Bitcoin, sound money, hard assets in general do really well in these time periods. So when people start to have doubts about the US dollar, when they think maybe the US and Western countries are over financialized, maybe they have too many derivatives for their limited stock of underlying assets, maybe they've pushed it too far for too long, they start to look for alternatives. And those are the time periods. And I have charts that show, and the best chart to look at these things, I think, and I've posted this many times, but it's like a 120-year chart of the S&P 500 divided by gold. And you see these huge peaks of financialization followed by these like 10-year drawdowns where we, you know, so and the times that they happened were back in 1929 was a peak, 1968 was a peak, and then 1999, 2000 was a peak, and we had our most recent peak in late 2021. And basically what happens is the world can't take the financialization anymore, and they start to leave US stocks and start to move into hard money, sound assets, right? Sound money, hard assets, those kind of things. So gold is an easy one. Other commodities tend to do really well. Real estate, those kind of things. This is the first cycle like this where we've had Bitcoin. So I'm optimistic that as the hardest money and the soundest money, that Bitcoin will do quite well, but it remains to be seen. So that's the kind of the macro, that's the secular, the overarching macro view that I see, is that the U.S. is basically an emerging market as far as its finances go. Treasuries are no longer the world's safe haven asset, or even the dollar as much, even though the dollar is better than basically every other government fiat currency. And people will continue to flee little by little, but more so during the acute events, the acute drawdowns. They will flee into Bitcoin, into gold, and into other hard assets.
Got it. Okay, that makes perfect sense to me. Just to be clear here, the chat, we got Fiat Smack, I think summed it up. It's official, the dollar is dead. Are claims of the dollar dying overstated?
Yes. The dollar is, for all of its faults, and I have a lot of criticisms of the dollar, right? You guys who know me know that I do, and of the central bankers and of the Fed and all this and all of our policies. But the dollar is still the best fiat currency of all of the fiat currencies. And so about 160 other fiat currencies have to die first before much happens to the dollar. I think the dollar will actually strengthen from a relative perspective, relative to other fiat currencies, which are going to do way worse much sooner than the US dollar.
Yeah, I'd agree with that. I mean, it obviously, as a Bitcoiner, you definitely get caught up in the, like, you know, purchasing power of the dollar from 1913. You know, it's 99% lost its purchasing power. And you do get caught up in like, oh, the dollar's dying. And then you kind of look like in a vacuum, you can make that case. But when you look at the macro, it's exactly what you said. It's like, yeah, the dollar's trash, but like, it's not going to go away for a while. I really like how Nolan, Count BTC, Nolan, I always mess up his last name, Bauerler. He's like, he's like, we are in a bimetal phase right now where it's the dollar and Bitcoin. And I think that's the best framing, because everyone gets caught into this idea. It's like the dollar's dead. You get in this doom, like it's going to die tomorrow. And you're like, no, that's definitely not what's going on right now if you're following the macro landscape here. But anyways, unless you want to go on that, I do want to go into the yen stuff that we saw, because I've been trying to make the case for the show. Like, if I don't talk about Bitcoin, they like really don't care. So I have to, like, you know, I gotta like massage the story so that they understand how important this is. So could you talk about, they know, if they watch the show, they know the importance, or rather the place that the yen, you know, has in the global kind of macro, like venture capital perspective of this. But could you hint on, or rather explain to the audience, the significance of what Scott Bessent did with the yen? What was it, 2 weeks ago? I think it was 2 weeks ago.
Yeah, a week or two, somewhere in there. Everything has happened in the last 2 weeks. So
yeah, it's been crazy.
Keep track of everything. But there are different explanations for why this happened, right? So I think everybody knows that the yen has been getting weaker and weaker relative to the dollar. And so there are lots of explanations for why and for why Bessent did what he did. One of the reasons why is because Japan has basically no energy source, right? They shut down the majority of their nuclear power plants. They have to import almost all of their energy. With the Persian Gulf situation going on, and with significantly increased oil prices in the world, around the world, that puts a huge burden on countries that have to import their oil for their energy, one of which is Japan, who is a major ally of the United States, obviously, right? So that has put a lot of pressure on their currency because it gets more and more expensive to buy oil priced in dollars. Excuse me. So their currency has been getting weaker and weaker. That's one thing that's been going on. Also, there's lots of other reasons. They're way massively over indebted, even worse than the U.S. If we talk about, I think they're closer to 250% debt to GDP, although they do have a lot of assets around the world, including they have lots of treasuries, which brings us back to what Bessent did, right?
Yep.
So if they want to defend their currency, what they can do is sell assets, usually in dollars, and they have lots of dollar-based assets, and then take those dollars and buy yen with those. So that should drive down the dollar and drive up the yen, relatively speaking, strengthen the yen and weaken the dollar. If they do that, though, there's a problem, right? Because the U.S., we already are struggling with very high bond yields on the long end of the spectrum. So from the 10 years currently at 4.65, the 30 years sitting at 5.21%. When you have so much debt like we do and Japan does, any bump higher in these rates means that our debt payments increase as well, and they can kind of snowball on each other, and it can be a debt spiral or a death spiral. So in an act of kindness, as Bessent would say, like what we're doing for our allies, they took part of what the Treasury had. They had some euro sitting kind of on their balance sheet, sort of as a reserve currency, a reserve asset. And they're like, hey, you know what? We're going to take this euro that we have and we're going to sell that and buy Japanese yen with that. And then they publicize it, right? So they do a lot of job owning. And the act of saying, hey, we're going to support our friends, the Japanese, we're going to support their currency. He showed a little picture of a note that said buy $5 to $10 billion of yen and posted that. Like, I mean, what a crazy time to be alive, right? Who does that? So he did that, and he's a former hedge fund manager who made a lot of money shorting, the pound, and that's a whole different story back in the 90s with George Soros. So he knows what he's doing in terms of currencies, he has a lot of experience in this area. So what they didn't want to do is have Japan sell their treasuries, because Japan is the #1 holder of U.S. treasuries. I want to say they have about $1.18 trillion worth of U.S. treasuries in their reserves. And so instead of selling those and possibly raising the interest rates for the U.S. treasuries on the long end, instead, Bessent basically extended a short-term loan and said, you give us some collateral, we'll give you some cash. You can use those dollars to buy yen with, and then you can pay us back at a later date. And so there are literally like probably 10 different interpretations of what that means. I tend to think that this is basically a form of like indirect yield curve control, right? Mm-hmm. He's saying, I don't want you to sell our treasuries because we don't want our rates to go any higher. Why don't you take this little short-term loan because you're our friend, wink, wink, and we'll keep all of our rates lower. That'll be good for all of us. And then you, Japan, can keep investing here in the United States and keep your investments so that we can continue to build out our infrastructure and the military-industrial complex upon which you rely so heavily. We'll keep this whole charade going. So that's why I think he did what he did. I think we haven't seen the end of it. I do think, by the way, that Japan's prime minister talked about they are okay with raising their interest rates even more. So that's going to affect that whole yen carry trade. Excuse me for a second. It's going to affect the carry trade, basically, where people, hedge funds and other institutions were borrowing yen at these lower interest rates, basically, and then using that money shorting the yen and buying other assets, basically. as Japan's interest rates go higher and as the currency starts to strengthen more, that carry trade is going to necessarily have to unwind. That's really interesting because lots of people have been using that sort of yen carry trade. Most people have heard of that by now, to help drive asset prices higher over the last, basically the last decade plus. Much of those gains were seen in the U.S. Basically the U.S. tech sector has been the primary beneficiary of that. So if that starts to unwind, that'll be interesting to see how our equity markets handle that. That's a really long answer, but
yeah, no. I mean, it's great. It's someone in the chat said Jeff is a Bitcoiner's dream dinner guest. It's like, I think you summed it up great with it. It's the most interesting time to be alive. And I think if we weren't all Bitcoiners, we would all probably be panicking because there's so many things that are happening at the same time that it does get like enormously scary with everything and the implications. You're like, oh my God, like it's all going to blow up tomorrow. Like I see why it's so easy for doomers to become doomers, because you look at this and the magnitude of these problems and you're like, okay, yeah, like this is really bad and there's no way out of this. And us Bitcoiners are kind of just like, yeah, but Bitcoin's down 50%. Like this sucks. You're like, wait, but like everything's going to blow up. Obviously not overnight, but yeah, in the context, like macros, I think the most interesting thing to me right now, just all these factors playing out and the wars, and you're just like, it's insane out there. I do want to talk, and we'll wrap up after this one. I do want to talk about the idea of the big print. Obviously, you kind of made the case for that. It's kind of happening. They're doing it kind of slightly. You know, they're doing it like where it's basically, you know, quantitative easing without quantitative easing, you know, headlines. I'm sure you saw, actually, I saw you tweet it. There was that interesting comment from Trump saying that they're going to eliminate capital gains, but like inflation based. You could read that in a way of them saying like, yeah, we're going to print a shitload of money. So, you know, as a Bitcoiner, we've all heard like Larry Lepard, the big print. We've heard, you know, Lynn Alden, can't stop this train. So where is your view with the big print? Like, is it still coming down the pipeline? Are they currently doing the big print? Are they trying to do the big print without the big print headline? Like, what's your take on the whole meme of the big print and it's coming and it's going to happen?
So first of all, I'm friends with those guys. I have breakfast with Larry probably once a year. He's a great guy. I like Larry a lot.
Yeah.
I think so. The big print isn't here yet, and I think he would agree that it's not here yet. We'll know it when we see it, basically. So like when you have a calamity in the financial markets, and the last one we had was basically during COVID, which then resulted in this just unbelievable fiscal and monetary response back in 2020 and 2021. Before that, the huge, you'll know it when you see it, was the financial crisis, 2008, 2009. You'll know it when you see it. Like everybody will be panicking, and whatever precipitates the event, and I think it's going to be the unwind of the AI trade, basically. Something's going to give, and it's going to be like an Enron type moment where somebody's going to be like, I can't make these payments, or some IPO will go wrong. Something will happen at some point, and the system will start to crumble, and then you'll start to see these jolts lower, and people will start having real fear. I want to be clear. If this happens, it will affect Bitcoin, and it's going to affect Bitcoin to the downside. So Bitcoin, because it's the world's most liquid asset, it's available 24/7, 365. It will get sold because of margin calls, because when stuff happens quickly, people get margin called. And when they get margin called, they don't get to pick and choose which asset they want to sell. Excuse me. They can't be like, oh, I want to sell that chump condo I have in, Tampa Bay. So let's hold off for a little bit and I'll get some liquidity once this sells. It's like, no, when you get margin called, it's like you got like a second to bring, or maybe a day, maybe 24 hours, sometimes only like an hour, sometimes less than that. And so whatever is liquid will get sold for this margin call. That includes Bitcoin. So what happened, I think, during 2020, I think it was March of 2020 when COVID first happened and we had that huge drawdown. I was positioned in my fund with, hang on a second, I gotta get a drink here.
No worries.
I actually saw that coming with my macro stuff that I watch. I'm like, things are going to get bad here and it's going to happen quickly. So So what I did is I actually loaded up in a lot of gold because I'm like, well, gold is like a great asset to own, and some Bitcoin. So I had these two things as sort of this safe haven go-to. They just both got smoked. Stocks crashed, bonds got hammered, everybody just went to cash. They actually sold all their gold. Gold got hammered down. Bitcoin dropped 50% from like 6,000 to about 3,000 in that range. It was unbelievable. And then they started to recover and started to go well. And I think that's a good example of what I think will probably happen this time around too, if it does and when it does, that even safe haven assets like sound money will get hit hard and they'll go down, but they'll be the first to recover because people will be like, what the heck? Why would I want to sell, this, and why would I want to own treasuries right now? And why would I want, they're bailing out the AI sector. This is insane. They're going to just debase all of us. So people will then flock back into sound money, and Bitcoin will be the first to respond, and gold, I think, will do well too. And sorry to talk about gold, but I came to Bitcoin through gold. So I always see things also through a gold lens, but, that's what I think is most likely to happen. Again, I don't know the timing of when it's going to happen, but I think it's illustrative for people to go back and look and see what happened back in 2020 during that it was kind of like a flash crash, but it was painful and there was a ton of fear and there were an amazing amount of margin calls and leverage long liquidation cascades during that time period. And when things move, they can move really fast. And so if you see that coming, I think the wisest thing to do, if you want to just chill, most people who are just DCAing and chill, that's like totally the way to go. That's what I recommend for 99% of the people. And for the other 1%, maybe build up a cash position leading into that. If you see like signs like something is coming, and be ready to buy stuff at fire sale prices and stink bid prices. And then that's coming full circle. That is when the big print is coming. So when things get crazy and when we start talking about this is a national imperative that we have to save AI, we have to save, pick your company, Anthropic and OpenAI, or we're going to lose to China. So therefore we have to print, several $1 trillion quickly and put them and flood the system with this easing. That's when it's going to happen. And we're also going to see this yield curve control. People are going to be talking about that because we're back into a treasury bond bear market where the yields just continue to go higher and higher. And in the past, these bear markets have lasted like 40 years. So I think we're probably going to be dealing with higher and higher interest rates, probably until like 2050, 2060, 2070, somewhere in there. I'll probably be dead by then. You guys will still be crushing it with your Bitcoin, and I'll be somewhere else. But so it's just a different world at that point. And so, anyways. It was great.
It's great. I think you're giving the audience a lot of alpha here. I do want to just add, I think part of what we're seeing right now is a lot of people still have that mental paradigm of the world is how it was in 2010. And I think maybe only some of us in Bitcoin and maybe more niche down, not just Bitcoiners, but like yourself and Larry and Lynn Alden that are more in tune with the macro and, the AI and Bitcoin all involved in it, that most of the macro conversations that I'm hearing is like exactly what you just said. It's like, guys, we're in a new world right now. What we knew worked in the past doesn't work now. And so everyone is trying to, for lack of a better word, just like iterate and adjust their mental macro picture because everything is so different right now. And what we know worked, it's just like, it's either it doesn't work and everything's broken, or just like adjust to kind of a new phase of where we are. And so I'm glad you keep kind of hitting on that same idea. It's like, no, like we're in a new era. And I've been saying that to everyone on the show about Bitcoin. It's like, look, I know 4-year cycle, things are kind of working out how we're used to, but this is a whole new era, not just in Bitcoin, but in the macro landscape. And I think a lot of us haven't really calculated that into where we're going from here. And so I'm glad you kept hitting on that because I keep saying it to everyone. They're like, yeah, okay, Opti, like, you don't know anything. I'm like, no, guys, like, I swear things are different now. They're like, oh, here we go. Opti saying this time's different. And I'm like, look, I know it's playing out normal, but like the underlying foundation is fundamentally different. Anyway, this last question's for me, and then I'll let you run out. What are you watching? Like, as someone that is very in tune with the macro, and I would consider myself a novice now, but to me, it's the most interesting kind of phenomenon happening. I think it's the best value I can add to this show is being more aware of what's going on in the macro and trying to explain it as easily as possible. So what are you watching? Like what, when you wake up in the morning, what are the things that you watch? And, maybe it's charts, maybe it's certain currency exchange rates. Like what are you watching in the morning? And again, this one's for me. I'm like, okay, what do I need to keep an eye on? Because I remember I had Larry, or no, it wasn't here. It was Larry at Mining Disrupt last year. He did his speech. And there was one moment where he's like, yeah, when I wake up, he's like, I watch the Bitcoin price, the gold price, the Japanese bond yields, the US bond yields, the Dixie, and I think he might have said like USD, Japanese yen rates. And I was like, okay, like, thank you so much, Larry. So every time I wake up, I'm literally like, it was equities. So every morning before the show, it's like Bitcoin price, gold price, S&P 500, QQQ, Dow Jones, Dixie, and then the various different government bond yields. So like every morning, I'm like, okay, where are we compared to not just Bitcoin, but in the macro? So anyways, what do you watch? What do you recommend for the budding macro economists out there watching this right now?
Yeah, so I'm glad you said that at the end, because I would say most people shouldn't watch any of this. Because it's just nonsense, right? Like it's fun to talk about, but like what most people should be doing is just stacking sats and going on with their lives, right? So you shouldn't be listening to any of this, and you shouldn't be worried about anything. Excuse me, I'm sorry. But what do I do? So for the macro nerds and the budding analysts out there, I actually have my trading view set up, and I can just go right through and I'll tell you what I do. So I get up and I pop my computer on and I look at the first thing at the top for me is what are short-term T-bills doing, what's the 2-year bond yield, and what's the long 10 and 30-year yields, like what are those at and where are they moving? Is it a normal curve? Is it inverted? Like what's it doing? And then I look at U.S. net liquidity, and I look at the MOVE index. So what is bond volatility doing? I also I have Brent and U.S. oil prices up there as well, because oil front runs CPI basically and PPI. So you can just tell what CPI is going to do each month based on what oil just did. And if a surprising amount of people still don't understand that, which I don't really get why, but that's like one of the easiest cheat sheets in finance. I look at VIX too. So like what is the volatility of equities doing? And then I look at the Dixie also. So what's the dollar doing in general? Because if and most of the time it doesn't matter, but if it's strongly accelerating, if the dollar is getting relatively stronger, the whole concept of the dollar wrecking ball starts taking effect, and that ruins everything. That's basically the time where you don't want to be in risk assets, and Bitcoin tends to get hit pretty hard when that happens in the short term. And then I look at kind of what the S&P 500 and NASDAQ are doing, Bitcoin price as well, and then I have gold and silver. And so I go through all of those things, and I always have. So if you ever see me doing this, where I'm looking over here, that's what I'm looking at. I'm looking to see what one of those things are doing. And that kind of gives me my overall macro picture in a nutshell. And so, if people want to do that, like if you can kind of understand how those things all interplay with each other, you can kind of front run asset prices and what things are going to do, like if oil is going up, you can be like, okay, that probably means that treasury yields are going to be going up, and if yields are going up, that means, and the yield curve continues to steepen, that's actually usually good for financials. So maybe banks will do pretty well going forward for a while. And you can kind of go through this whole series of exercises about which asset classes will do well and which might be struggling in the near term.
All right. Well, formerly Dr. Jeff Ross, thank you so much. This was awesome. I've turned into the macro nerd. Nico's always like, oh, Opti's our macro expert. I'm like, no, I'm not. Like, go to Jeff and Lynn and Larry. I'm just here trying to understand that, because one of the things we've always said is, we came to Bitcoin, and then through Bitcoin, we looked at the kind of the traditional macro landscape. And one of the things that I've noticed since you guys all got kind of really big, and the more I do this show, the more I'm like, oh, wait, I can't just think about Bitcoin in a vacuum. And looking at what's going on in the global markets, I know we like to say Bitcoin is, uncorrelated or it's decoupled, but what happened in the macro markets definitely affects what we're doing here in Bitcoin. And I think the best way to end this is what you said in the beginning. It's like Bitcoin is becoming the macro asset or a macro asset. And so we can't just look at it in a vacuum. And hence why I'm like, okay, let's give the boys some macro kind of analysis here, maybe give them some tools. So on that note, Jeff, what are you doing now? Like, what have you been up to? And plug your socials, and then we'll wrap up for today.
I'm not doing much. I just run a little friends and family hedge fund. I'm not working as a doctor anymore. That's why my handle is FormerDrJeff. And just so people know, I actually, after we talked about this a little bit at the beginning, but after like a 2-year hiatus off of Twitter, I joined X again like 2 weeks ago, and so that's my handle, FormerDrJeff. And now I'm all active again. I'm probably going to burn myself out again, but so yeah, that's about it. I'm just just here, happy teaching about Bitcoin and spreading love.
Well, really appreciate it, Jeff. This has been fun. I know I'm going to have to rewatch this one. Marinate in everything that you were saying. Wait, pause. No, not like that. Guys, chat, not like that. No, I think I think this was I'm really excited we did this one. So we'll have to maybe we'll do one in a couple of months from now, towards the end of the year, bring you back in, give everyone an update on like a year in review version of where we are in the macro. So Jeff, truly appreciate it. Thank you so much. Thank you for your time and your wisdom. This has been awesome.
Thanks for having me, Opti. It was fun.
Let's go. All right, guys. Well, you already know the deal. Let's wrap up today's show. Hey, guys, one more show for the week, all right? One more show, and then I can get a weekend break. So as Jeff was saying, I don't lose my mind. You guys have been seeing me lose my mind constantly. I'm trying to keep it together here for you guys, all right? I'm trying to keep it together. Your boy needs a break, but we're going to show up anyways. As you know, Monday through Friday, around 12:40 p.m. On that note, guys, you already know the deal. Get outside, do some workouts, eat some good food, call your loved ones, of course, stack some Bitcoin. And I'm going to add another one. Guys, turn off the Twitter, all right? Turn off the conspiracy YouTube videos. You guys are going insane, all right? Let's minimize the social media diet. All right, last little rant. I swear everyone is gone insane. Like legitimately everyone has gone insane. I'm going insane looking at my Twitter timeline. Guys, let's touch some grass. All right. Let's go do something outside of Twitter. It's not real life. It's driving literally. All right. It's not just AI psychosis. Like the AI psychosis is crazy right now. But the social media madness on top of the AI psychosis is like, we have literally all gone insane. And I'm trying not to go insane. I'm really trying. I have a good grasp of my mentals, and I can feel myself getting pushed off the edge. I'm like crashing out on my timeline. I physically feel myself crash. I see the dumbest stuff, and I'm like, angry. I'm like legitimately angry. I'm like, oh my God. I'm at the verge where I'm going to unfollow everyone again. I do this every 6 months to a year. I just mass unfollow everyone. I clean up my timeline because it's driving me insane. I'm literally going insane. Anyways, let's avoid that. Let's avoid going insane. Touch some grass, eat some good food, hang out with your friends. Of course, stack some Bitcoin, take it off the exchanges, all that good stuff. I love you guys. I'll see you tomorrow. I hope you have a good rest of your day. Peace out.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.